Hello and welcome to this edition of the weekly video market update from Orbex.com. The main stories last week were from the United States again, whether from the FOMC Meeting Minutes, but most importantly the US jobs report, which came in with some confusion, leading to a high volatility in various directions until the end of the week, or until the closing bell on Friday. Beginning with the FOMC Meeting Minutes, the minutes basically did not give us that much clues about the number of the rate hikes the Federal Reserve might even do until the end of this year. The Fed Fund futures also are still pricing in only one more rate hike this year, probably around September, even after the US jobs report figures. However, the Federal Reserve also began to hint about the possibility to unwind its balance sheet later this year, probably also around the end of this year. However, this is still too early to judge, but might be one of the catalysts for some USD buying later this year, only if the Federal Reserve starts to sell the bonds. As for the US jobs report, I would say that Friday's jobs report or the figures is basically concerning. The reasons for such concern is not only because of the NFP disappointment, but the gradual decline in the wages growth and the notable downward revision of last month's jobs report, which basically might be a sign for a beginning of a weakness. Moreover, the biggest weakness came in from the retail sector, which is a very important sector in the States, while the biggest gain came in also from the household payrolls. Yet, I wonder what the US administration would say about Friday's figures, especially that last month they said that the numbers are very real and very positive when it was above 250,000 new jobs. The question now is it still real when the NFP came in also below the 100,000 jobs? Only time will tell. Now, if you're asking also the same question why the US dollar is also continued to rise or spiked higher, despite the fact that the NFP and the wages came in weaker than expected, the answer is in the unemployment rate, which basically declined or dipped lower below the Federal Reserve forecast for this year. And the other question is, does it mean that the Federal Reserve will raise rates even faster than before? Not exactly, as we still need to see more stable jobs growth, higher participation rate, which is most importantly, and higher wages, which basically in order to increase the pace of rate hikes, especially if inflation continues to rise. And this is why I would keep the bearish outlook on the US dollar unchanged in the coming weeks, despite the recent rally. These are the most important events that I wanted to talk about at the beginning of this video today. But for the time being, let's have a look at our weekly technical charts. Beginning with the US dollar index as always, and as I said at the beginning of this video, the US jobs report basically gave a push to the US dollar index after it traded also within a tight range over almost 4 days, or since the beginning of last week until the end. And then on Friday we had the break above the 50-day moving average all the way to the 200-day moving average, breaking above the 100 barrier and also above the 101, reaching or closing the week at 101.18. However, the trend remains on the downside, and still the bearish outlook remains unchanged, at least until as long as the index continues to trade below the 101.30s, and that would be the minor trend line. At the same time, the previous top remains at 102.26, and this is basically, and after this move and after it failed to break below the 98.89 support area, which was the neckline of the former head and shoulders, this would eliminate the bearish pattern or the bearish head and shoulder for the time being. But it does not mean that the outlook has changed to the upside yet. So far, we retraced it by 61.8% from the recent declines that we've seen for the past few weeks. But at the same time, I still believe that the US dollar index would not continue the upside move in the next, or at least in the next few days. I would believe that there might be just a slight test to that resistance area or the trend line resistance before the downside trend continues. But so far, as I said before, the downside the downside or the bearish outlook remains, the major bearish outlook remains as long as it stays below 102.26. Going into the weekly charts for the Kiwi and the Aussie. Beginning with the Kiwi made a very interesting move again last week, and as we said in our previous weekly report, as long as we stays within the 50 and the 100-week moving average, there will be no big deal to look at the pair. At the same time, the technical indicators are heavily oversold, which after last week it continues to give more more and more indication for another period of stabilization, which is still remains the same since June of 2016 until today. We within the same tight range with a failure to break again above the 73 many times this year, and also at the same time we have the support area right now, which stands at 68.77. But before that, we have the 100-week moving average, which should be watched very carefully in the next in the next at least in the next week. So this might be tested in the next few days, which is around 68.98 before we should see actually a bounce from there. But at the same time, a breakthrough that level, which is 68.77, would basically increase the risk for another leg lower. The Aussie is more clear actually than the Kiwi. Again, we had a failure of the past 2 weeks to break higher and continued all the way back down, testing its 50-week moving average on the weekly chart. The technical indicators also continues to trade or continues to point lower. The RSI is now below the 50. The stochastic indicator is also still pointing lower, which means basically, or at least, it gives more indications for more downside ahead. And as we said for the past few weeks, it seems that the Reserve Bank of Australia would not allow the Aussie to break above the 70, 76 or even the 77s, and it seems that there will be some sort of any interventions whenever the Aussie tries to break above those or this area at least. And this is what we saw actually on the past 2 weeks, and then we had last week we had a huge drop in the Aussie, and it was one of the weakest currencies during last week. So for the week ahead, I would be looking also for another downside, or at least another a leg lower, maybe toward the 74.60s, which basically just a former resistance area here, where the technical indicators should be also heavily oversold back during that time. So I still believe that the Aussie will still on the downside more than the upside, despite the fact that the US dollar outlook remains also on the downside. Looking also at the euro. The euro actually failed to break above the 200-day moving average and below its trend line on the daily chart, which is long-term, almost like a long-term chart. But at the same time, the 200-day moving average is also a very strong resistance area that we talked about over the past few weeks. But at the same time, it continued to decline for more than like almost 2 weeks, and right now we're below the 50, we're below the 200, we're below even the 100-day moving average. But at the same time, the weekly close was a little bit positive because first of all, we have most of the indicators are heavily oversold. That's number one. Number two, the trend line is basically remains solid, or at least the euro closed the week or last week above the short-term uptrend line on the daily chart, which makes it basically easier to spot that another spike might be seen, especially at the same time, like on the longer-term view, from the lows of this year or the lows of December of last year until the highs of this year. We are kind of within the buying area that we're in right now, between the 50% Fibonacci and the 61.8 Fibonacci on the daily chart, which basically again makes it a possibility for a bounce from this level, which is a buying zone between the 50 and the 61.8. But for the time being, I would keep it. I would say for the time being, as long as we continues to trade above the 61.8, which is at 55.66, I would still be interested to buy the euro again, despite the fact that the RSI is still on the downside. But I believe after this decline that we saw last week, there's some sort of a room to the upside, at least to retest the 106.60s. Continuing all the way to the British pound. The British pound finally continued also to break lower and continued to weaken even further after it tested its trend line resistance on the daily chart over the past 2 weeks and continued all the way down. And last week, actually, the weekly close, actually last week, it considered to be as a very as a bearish, actually a bearish sign, especially that we closed on the lows of the week. That's number one. And number two, we had a break or the close below the 50 and the 100-day moving average on the daily chart. This basically opens the way for another leg lower in the next few days. The RSI, the stochastic indicators are still far away from being oversold. Therefore, I still believe the weakness in the British pound would continue in the next few days or during this week. Going to the dollar yen. Dollar yen also continues to trade within a range bound again within the same area, 111.64 and also 111.09 with no clear break above or below those levels. And I'm gonna still watch these levels in the next few days. No big comments on the dollar yen for the time being, but it seems that we are having right now some sort of a double bottom on the daily chart. In addition to that, the Friday close was pretty positive, which actually again makes it there is a possibility for another spike all the way back to retest the 1164, which is a former support here, and it was broken. And at the same time, the pair also dipped back lower from the same area. So for the time being, I would say just cautiously buying on the dollar yen, but not for a long time. And I still believe the downside or another leg lower could be seen in the next few weeks. Going into the gold and silver, which continues to trade within our plan for the year. However, the 200-day moving average again remained very solid, whether on the daily or on the weekly chart. On the daily chart, it was pretty clear. We tested the 1270, but the daily close or the weekly close also was below that resistance and closed at 1255, despite the week or the week close on Friday. There's still a possibility for further gains in gold in the next few weeks. However, for the time being, I would expect the price to retest all the way back or to decline back all the way to 1240, which is the former resistance, break above that level, and then right now we're testing these levels. At the same time, on the weekly chart, it is still again below the 50-week moving average, the one that we talked about also, but the weekly trend line remains on the upside, which is still possible or still positive or giving us positive indications for more upside ahead in the next weeks and months. But for the time being, I would be looking for a retracement toward maybe 1241 before buying it again or before jumping into another long position. Finally, we'll talk about silver. Silver also touched the previous or the former resistance here, also at around 1850, but it also failed to break above that resistance and continued also all the way back down below the 200-day moving average on Friday and closed the day below that resistance. Also, the technical indicators were heavily overbought in the past 2 weeks. This basically opens the way for another leg lower, at least for silver, to retest again the 17, or first of all we will be looking to test 1778, which is the 50-day moving average, and maybe 1770s for a test before the upside trend resumes. So this is it for today. If you like also this video, please share it on your social media platforms, like it, and also subscribe to Orbex channel on YouTube to get the latest videos once they are published. And if you have any questions, please leave them below and I will try to answer your question as soon as I can. Thank you for watching. Have a good week ahead.